Yo guys, welcome to the second video of the Asia sweep. In this video I'm gonna cover what swing highs and lows are and why they're so important for the Asia sweep. Why strong highs and lows matter. So this lesson is a review. In the core content you already learned what a swing high and swing low is. This section focuses on strong swing highs and lows specifically for the Asia sweep strategy because they are critical for the stop loss placement and trade success. The stop loss in the Asia sweep is always placed at a strong swing low or high. A weak or poorly chosen level can invalidate a trade, even if the entry and risk reward setup are correct. Strong levels also increase the probability of a successful trade because they represent clear market structure and liquidity zones. So the characteristics of a strong swing high and swing low are quite easy. First of all, it's important that there is clear structure, so the level is clearly defined on the chart. Price reacts visibly at the level and respects it, and it should make logical sense for placing a stop loss. If you cannot justify your stop loss here, it's not strong. The second important characteristic is displacement. So price must move away from the swing high or low with intent, showing control by buyers for lows and or sellers for the highs. This movement indicates market commitment to the level. The bigger or cleaner the displacement, the higher the probability that the swing high or low is strong and will hold. Then we can also use fair value gaps as confirmation or extra confluence. A fair value gap forming after a swing high or swing low is not mandatory, but it adds extra confirmation. Fair value gaps indicate that price moved quickly and left an inefficiency, showing additional displacement. Now let's take a look at some live market examples. Here we can see this swing low. This swing low is pretty good. It leaves this fair value gap behind, which makes it a good swing low. And we can see that price respects this level and pushes further to the upside. Here we can also see another swing high in this case. We can see that this swing high taps a fair value gap and pushes lower. And it pushes lower with quite a lot of power behind it. So it leaves multiple fair value gaps behind and leaves structure as well. So in this case I place my stop loss above this one. We can see that this clean swing high holds and then price pushes lower again. Another example here, another clean swing low. We can see the engulfing candles leaving fair value gaps behind, and we can see how price respects these levels. Now let's look at some examples on EU. We can see here price sweeps this low and then reacts very aggressive to the upside, again leaving fair value gaps behind, multiple fair value gaps, which makes it even better. So yeah, good swing low to place your stop loss at. Price taps it and pushes up. Now here we have a swing high, which is not that high probability because it does not have fair value gaps forming after the swing high. So I would take this as a B setup. Now here another very clean example of a swing low. We can see that we sweep this liquidity. We show a lot of displacement. We create this fair value gap, push higher. Then we expect price to sweep these lows, tap into this fair value gap and push higher. So clean stop loss, entry, TP. Okay, I hope this makes the concept of swing highs and swing lows a bit clearer. And you will see some live examples in the next video.